Picture the exact moment you're about to book your dream trip. You're sitting at your computer, heart racing a little, because everything is finally lined up. The perfect flight to Rome is there, or that Alaska cruise you've talked about for years. Your bags are mentally packed. You've typed in your name, your passport number, your credit card. Your finger is hovering over the purchase button when something appears on the screen. A brightly colored box, a friendly suggestion. Protect your trip for just $49, recommended. And in that split second, fear sneaks in. You think about your age. You tell yourself you're being responsible. What if you catch the flu? What if your husband's back gives out? Better safe than sorry. You click yes. You pay the $49. You feel relief wash over you. You believe you've protected yourself. I need you to listen very carefully because this is where most travelers over 60 are misled. You did not buy protection, you bought a revenue stream. That small checkbox is one of the most profitable clicks on the entire airline website, and for older travelers with medical histories, it is often completely useless. By clicking it, you likely purchased a policy that quietly excludes your blood pressure medication, your heart condition, or your past surgeries. Worse, the medical coverage limits are often so low they wouldn't cover even 2 days in a European hospital. I want you to understand how serious this is. I had a passenger named Arthur. He clicked that box. He felt secure. While visiting family in Spain, he suffered a stroke. Because of technical wording buried deep in the airline's fine print related to his medical history, the insurance company paid nothing. Zero. Arthur and his wife were left with a medical bill of $150,000 and another $40,000 for a medical jet to bring him home. In 1 week, half of their retirement savings disappeared. Do not let that be your story. Today, I'm going to explain exactly why that checkbox fails you and how to buy insurance that actually protects your life savings. If this is your first time here, welcome. My name is Mila. I've been a flight attendant for 15 years and flown millions of miles. I don't sell insurance. I don't earn commissions. My knowledge comes from the other side of the curtain. I'm the one standing in the galley when paramedics board. I'm the one holding a spouse's hand when they don't know how they'll pay the ambulance waiting outside. I see these emergencies unfold in real time, and months later, I hear the same words again and again. Mila, I thought I was covered. The travel industry depends on your fear and your lack of time. They assume you won't read the 40-page document attached to that $49 checkbox. I have read it, and now I'm going to translate it into plain English, starting with what that insurance actually protects, and what it dangerously ignores. Let's start with where your money actually goes when you click that airline insurance box, because understanding this changes everything. When an airline or cruise line sells you insurance, you need to ask one simple question: what are they truly protecting? This is where most people are misled. The policy is not designed to protect your health or your future. It is designed to protect the cost of the trip itself. This is what I call the trip cancellation distraction. The airline policy focuses almost entirely on reimbursing your ticket if you get sick before you leave. If your flight cost $800, the insurance is meant to give you that $800 back. That sounds helpful, and it is to a point. But let's be honest. Losing $800 is painful, but it won't destroy your retirement. What will destroy it is a medical emergency overseas. And this is exactly where airline insurance fails you. Most airline add-on policies cap emergency medical coverage at a shockingly low amount, often between $10,000 and $20,000. To a healthy 25-year-old, that number sounds large. To a senior traveler in a foreign hospital, it is almost meaningless. Let me put real numbers to this. In today's world, a broken hip in London that requires surgery and a short hospital stay can easily exceed $40,000. A heart attack in Mexico that requires a stent and ICU care can run $60,000 or more. A stroke on a cruise ship that requires a helicopter evacuation can cross $100,000 before you even reach land. If your policy only covers $10,000 and the hospital bill is $50,000, you are responsible for the remaining $40,000, often before they will discharge you. I remember a retired teacher named Mr. Evans, 74 years old, who bought airline insurance for his trip to Paris. He tripped on a cobblestone street and shattered his leg. It was a complex fracture with complications. He spent 10 days in the hospital, The bill came to around $45,000. The insurance company sent him a check for $10,000 and closed the case. The remaining $35,000 went on to high-interest credit cards just so he could return home. He is still paying for that fall today. Before you ever buy travel insurance, you must open the schedule of benefits. Ignore trip cancellation. Scroll until you see emergency medical expense. If that number is under $50,000 or under $100,000 for cruises, the policy is not protecting you. It is protecting the airline. Now let's talk about your health, because this is where many seniors unknowingly disqualify themselves. You may consider yourself healthy. You walk every day, you manage your conditions, but the insurance company sees something very different. This brings us to the next trap, the look-back period. Almost every airline checkbox policy has a strict exclusion for pre-existing conditions, but they define pre-existing in a way most people don't understand. They use a look-back window, usually 60 to 180 days before you bought the policy. They will request your medical records for that period, and treatment in their eyes does not mean surgery or hospitalization. It includes routine checkups, mentioning a symptom, changing a dosage, even lowering a dose as a precaution. To them, any medical interaction means your condition was active. I want you to understand how unforgiving this is. I had a passenger named Mrs. Gable flying to her granddaughter's wedding. She had a heart condition, but had been stable for years. 1 month before booking, she went to her cardiologist for an annual visit. He slightly adjusted her medication dosage, just to be safe. During the trip, she had a heart scare and needed hospitalization. The claim was denied. The insurer pointed to the dosage change within the look-back period and declared her condition unstable. She received nothing. If you rely on airline insurance, you are essentially betting that your body will have no issues connected to your medical past. At 70, that is not a reasonable bet. The good news is this does not mean you can't be fully insured. It means you must buy insurance the right way, and that brings us to the only path that actually works for travelers like you, which is using what I call the golden window. This is the point where most travelers miss their chance without ever knowing it existed. There is a special clause in reputable third-party travel insurance policies called a pre-existing condition waiver. This waiver is powerful because it legally forces the insurance company to cover your chronic conditions, whether that's high blood pressure, heart disease, diabetes, joint replacements, or other long-term issues. With this waiver in place, the insurer cannot deny your claim simply because the condition existed before the trip, as long as you were fit to travel on the day you bought the policy. But there is a strict rule, and it's non-negotiable. You must purchase the policy within a specific time frame after your first trip payment. That window is usually between 14 and 21 days, depending on the insurer. Miss that window and the waiver disappears. This is why airline insurance fails you by design. Many people book a cruise deposit months in advance, then buy the flight later, and then click the airline insurance box thinking they're protected. By that point, the golden window closed long ago. You need to know your day zero. Day zero is the day you put the very first dollar toward the trip. It might be a $50 cruise deposit, a tour reservation, or a flight purchase. That date starts the clock. From that day, you have 2 to 3 weeks to buy third-party insurance if you want your pre-existing conditions covered. Waiting until the week before departure is too late, no matter how healthy you feel. Let me show you why this matters with a real success story. I had a passenger named Brenda who was on dialysis and had a very complex medical history. She booked a trip to Italy and understood the risks. Instead of clicking the airline checkbox, she went to a third-party insurance site the same day she booked her flight. She bought a policy that clearly stated it included a pre-existing condition waiver. During her trip, she developed a kidney infection related to her dialysis and was hospitalized for 3 days. The bill came to $12,000. Because she had purchased within the golden window and had the waiver, the insurance company paid the entire amount. If she had relied on airline insurance, kidney failure would have been flagged immediately, and the claim would have been denied without discussion. Now that we've talked about hospital bills, we have to talk about something even more frightening: getting you home. This is where many travelers believe they are protected when they are not. Airline insurance often advertises medical evacuation coverage, usually around $50,000. That sounds reassuring, but the wording hides a dangerous limitation. Airline policies typically cover evacuation only to the nearest adequate facility. That phrase is doing a lot of work. In plain terms, it means the insurance company decides where you go, not you. If you have a stroke in a remote part of Mexico, they are not required to fly you to Miami or back to your cardiologist. They are allowed to take you to the closest hospital that technically meets their definition of adequate. That might be a public hospital in a rural city with different standards of care and limited resources. Once you arrive there, their obligation ends. You are considered stabilized, and you are on your own. I once worked a flight bringing a man named Robert back from the Dominican Republic. He looked exhausted and decades older than his photo. He told me he had suffered a heart attack at a resort. His airline insurance refused to bring him to Florida, stating that the hospital in Santo Domingo was adequate. He spent 3 weeks there, sharing a room without air conditioning, and developed an infection. His wife eventually had to remortgage their home to pay $35,000 for a private air ambulance to get him back to the United States. The insurance company's response was simple. He was stable where he was, and convenience was not covered. This is why serious travelers either buy third-party insurance that includes hospital of choice language or add a medical transport membership like MedJet. This is not insurance. It is a membership service. If you are hospitalized more than 150 miles from home, they ask one question, where do you want to go? Then they arrange transport to that hospital. No debates, no arguments, no fine print games. If you travel internationally, this protection is worth more than airline status or lounge access, because when things go wrong, the ability to come home can mean everything. And once you understand evacuation, we need to talk about a misconception I hear on almost every international flight, especially from American seniors. I hear it whispered with confidence, usually while boarding. I don't need extra insurance. I have Medicare, and I even have a great supplement. This belief is one of the most dangerous assumptions in travel. Medicare stops at the border. The moment your plane touches down outside the United States or your cruise ship sails beyond U.S. waters, your Medicare card becomes nothing more than plastic. Yes, some Medicare supplement plans advertise foreign travel benefits, but the fine print matters. Most of these plans have a lifetime cap, often $50,000. That is not per trip. That is for your entire life. One serious medical event can erase it completely. Even worse, these plans usually do not cover medical evacuation, and they almost always work on a reimbursement basis. That means you must pay the hospital bill first, out of pocket, and then file a claim later. In many countries, hospitals do not operate like they do in the US. They do not bill you later. They operate on what I call a pay-to-leave system. If you cannot pay before discharge, you don't go anywhere. I've seen this reality up close. I once had a couple, the Hendersons, returning from Rome. Mrs. Henderson had suffered a severe gallstone attack and needed emergency surgery. The hospital bill was 18,000 euros. They presented their Medicare and supplement cards with confidence. The hospital administration politely explained that they do not bill American insurance companies. Payment was required immediately. The Hendersons had to call their son in Ohio to wire money from their savings account just to secure her release. They were reimbursed months later, but the stress and financial shock stayed with them far longer. Now let's talk about another false sense of security, the premium credit card in your wallet. Cards like Chase Sapphire Reserve or American Express Platinum are marketed as all-in-one travel protection tools. They are excellent for points, lounge access, and some travel perks. But when it comes to medical emergencies, they are often dangerously limited. Many premium cards cap emergency medical coverage at $2,500. That barely covers an ambulance ride. Even when the limits are higher, the coverage is almost always secondary. That means the card will only pay after your primary insurance denies the claim. You could be waiting months while bills pile up. If your card's benefits guide uses the word secondary, that is your warning. Secondary coverage means paperwork purgatory. You submit to Medicare first. You wait. You receive a denial. You submit that denial to the card company. You wait again. Meanwhile, the hospital expects payment now, not 6 months from now. This is why relying on credit card insurance for medical emergencies is a mistake. Now let's move to flexibility, because fear isn't always medical. Sometimes life simply changes. Airline insurance only lets you cancel for very specific reasons: death in the family, jury duty, or a documented illness. But what if you wake up and just don't feel right? What if there's political unrest, a new virus in the news, or your travel companion can't go anymore? Airline policies don't care. If your reason isn't on their list, you get nothing. This is where cancel for any reason coverage comes in. It is only available through third-party insurers, and you must buy it within the same golden window we discussed earlier. It costs more, usually about 40% extra, but it allows you to cancel up to 48 hours before departure for any reason at all. You don't need permission. You don't need to justify yourself. You typically get 75% of your money back in cash, not vouchers. I had a passenger named Brenda who booked a $10,000 cruise to Asia. 2 weeks before departure, political protest erupted near one of the ports. The cruise line refused refunds. Airline insurance denied coverage. Brenda had purchased cancel for any reason coverage early. She canceled. She received $7,500 back. She lost some money, yes, but she saved far more than she lost. Understanding what coverage gives you control. It turns fear into choice. And once you have choice, you stop clicking boxes out of panic and start making decisions that protect both your health and your future. And control is exactly what most people lose at the final stage, when it's time to get paid. This is the part that determines whether your claim is resolved in a few weeks or drags on for months, sometimes years. It comes down to a single technical distinction that sounds boring but changes everything: primary versus secondary coverage. Most airline policies, credit card benefits, and cheap add-on plans are secondary. That means they are not the first line of payment. They step in only after every other possible insurer has formally denied the claim. Here's what that looks like in real life. You get sick overseas and receive a hospital bill for $20,000. If your policy is secondary, you cannot send that bill directly to the travel insurer. You are legally required to submit it to Medicare or your home insurance first. You wait while they review it. They deny it because it happened outside the US. Then you request an official explanation of benefits showing the denial. Only after you have that document can you submit the claim to the travel insurer. This back and forth can take 6 to 9 months. During that time, the hospital expects payment, and collections agencies do not care that you are waiting on paperwork. Now compare that with primary coverage. With a primary policy, the travel insurer becomes the first responder to your wallet. They do not wait for Medicare. They do not ask for denial letters. They process the claim directly. I've seen this difference play out on the same trip. 2 passengers, same ship, same illness. Both needed IV treatment for a severe stomach virus. The bill was $2,500 each. One had secondary coverage and spent months fighting through forms and phone calls. The other had primary coverage. She took a photo of the bill, uploaded it to the insurer's app, and had the money deposited in her account before she even returned home. When you shop for insurance on a comparison site, there is usually a filter labeled primary medical. Click it. The policy might cost $15 or $20 more. Pay it. That small difference buys you speed, simplicity, and peace of mind when you're already under stress. Now I want to speak to my frequent travelers. If you take multiple trips a year, buying insurance for each one is often a waste. Many major insurers offer annual multi-trip plans. You pay one flat fee, often between $250 and $450, and it covers every trip you take that year over a certain distance from home. If you're less concerned about cancellation and more concerned about medical protection, there are even medical-only annual plans that focus solely on your health and evacuation. For active retirees, this is often the smartest, most efficient choice. We've covered the traps, the loopholes, and the solutions. Now it's time to bring it all together, because the goal isn't to scare you. The goal is to give you confidence, the kind that lets you enjoy the trip you worked so hard to earn. And confidence is exactly what real protection gives you. Not the false comfort of a checkbox, not the illusion of being covered because a website told you so, but the quiet assurance that if something goes wrong, you and your savings are truly protected. Nobody wants to imagine getting sick on vacation or dealing with an emergency far from home, but ignoring the risk doesn't make it disappear. Understanding it gives you power. You worked hard for this stage of your life. You saved carefully. You waited years for the freedom to travel on your own terms. Your retirement savings are not just numbers on a statement. They are your security, your independence, and your legacy for your family. Putting that at risk because of a rushed click or unread fine print is something I never want to see happen to you. It takes about 10 extra minutes to do this the right way. 10 minutes to go to a third-party comparison site. 10 minutes to check for a pre-existing condition waiver. 10 minutes to confirm that your policy is primary, not secondary. 10 minutes to make sure evacuation means getting home, not getting stuck in the nearest available hospital. Those 10 minutes can save you tens of thousands of dollars. They can mean the difference between recovering near your own doctors or being stranded halfway across the world. I want you to think about your next trip differently. When that pop-up appears offering recommended protection, pause. Ask yourself what it really protects. Ask whether it covers your body or just your ticket. Ask whether it pays first or makes you wait. Ask whether it brings you home or leaves you where you are. If it can't answer those questions clearly, don't click it. If you travel often, consider an annual plan that follows you wherever you go. If you're spending serious money on a big trip, consider cancel for any reason coverage so life can change without financial disaster. And if you're ever unsure, remember this rule. Airline insurance exists to protect the airline's profits. Proper travel insurance exists to protect you. I'd love to hear from you. Have you ever had a claim denied? Were you surprised by what wasn't covered? Or have you found a third-party insurer that truly delivered when you needed them most? Share your experience. Your story could save someone else from making the same mistake. I'll leave you with this final thought. You are not careless. You are experienced. You check expiration dates. You plan ahead. You think things through. Apply that same wisdom to your travel protection. Don't let fear make the decision for you. Take control. Be informed. Travel with confidence.